Good morning, thank you for being here for the Hedge Investment Credit Fund update for the month of October 2024. The month was decent, we were up around 1%, bringing the gains year to date above 12%. It was a good month, but a month also of consolidation and rationalization of the book ahead of the very big electoral appointment in the United States of America. We kept on taking profit on our position in Argentina, both government bonds and some of the corporate bonds, and a very small portion of equity. We enjoyed the continuous successful restructuring of Argentina. We still think it's very undervalued, although obviously is becoming more attractive in terms of profit-taking opportunity. Away from that, we had a successful trading on the fixed income side, both US Treasury and European bonds. Overall, we think that whoever is going to win the election, there's probably going to be some sort of negative impact on the deficit and a continuation of supply in the US, and at the same time, the economy, which is quite strong, and the inflation, which is not exactly collapsing. So sort of similarly to what we've seen in UK, with the difference that in US the economy is much stronger. So we remain quite cautious overall. Fixed income, I think the only way to go long fixed income is if there's going to be a very contested or heavily contested results in the States. Because of that, we reduced quite a lot our position with the risk profile of the book, and we trying to get into the event with some optionality, both in the case of Trump winning and Kamala Harris winning, with the view that we would expect still a bit of pressure on the fixed income side. Equity obviously will depend sector by sector. Away from that, it could be really good or bad for Europe and the rest of the world. So obviously it's something else to kind of keep an eye on. But overall, we think there is a very, very close election, so very difficult to position on it. Apart from that, we still think that the most impactful part of whatever's happening from the election is going to be, first of all, the fiscal policies, United States, which obviously will be very different from Trump to Kamala Harris, from tariff to possibly more government spending. And then obviously, second, there will be plenty of ramification in terms of, what's the position of the United States towards Russia and Ukraine, with impact on the gas market in Europe, what is position towards Israel and Iran, with obviously implication on the oil price. We remain very cautious. We still think that the economy is not doing that badly, and so the inflation is not collapsing so quickly. So possibly it will be quite an interesting year-end rally, if you want, for some of the risky assets. But obviously on fixed income, you need to be a little bit more careful. Thank you.